Hello everyone. This is the pre-market report video for today, 28th December 2023 for the Indian stock market in terms of Nifty and Bank Nifty. First, let's see what happened yesterday. Nifty hit another all-time high value 21,675 and closed positive for the fourth consecutive session at 21,655 over 200 points positive. Here, most of us know yesterday's jump happened mainly in the last hour of trading and it was mainly supported by financial sector, especially public sector bank which increased over 2%. Regarding the reason, during our market time, RBI released the mega report titled Report on Trend and Progress of Banking in India 2022 to 2023. This report is huge, over 228 pages. If anyone fancy reading it, I will attach the link in the description below. Please have a go. In this video, I'll just highlight some. As per the report, the total balance sheet of banks in India grown by 12.2%, whereas NBFC balance sheet increased by 14.8%. So simply the assets increased and also the asset quality. At the end of March 2023, all banks combined their gross NPA dropped to the all-time low value 4.6%. Here, the highlight is from that 4.6% gross NPA, in September 2023, it dropped further to just 3.2%. This is like a massive drop, and the main drop mainly comes from the public sector bank, hence the positivity in PSU banks yesterday. In addition, everything improved: profitability, net interest margin, and capital to risk weighted assets ratio, etc. However, the report mentioned that there was an increase in the number of frauds in first half of FY 2024 with around 14,500 cases compared to just 5,500 cases in the same period last year. Despite this increase, the total amount involved in these frauds significantly decreased from over 17,700 crore rupees to just 2,642 crore rupees. Basically, this report is just a showcase that how good Indian banking system has become now, which in turn increased the positivity in both banks and NBFC stocks. Sector-wise, except energy, all others ended in green, especially banks and metal each grew by over 1%. About metal, we discussed in detail in the last video itself. Moving on, after 6 days of selling, finally FII turned as net buyers. Yesterday, the net bought for 2,930 crore rupees, whereas DII net sold for 190 crore rupees. So that's the quick summary of what happened yesterday in Indian market. Now let's move to the US market. Unlike Indian market, last night in US it was pretty calm. There was no major macro or scheduled release and there is only 2 more days left in this year. Just for info, for most of the US investment firm, calendar year is the financial year. So basically the trading, whatever happened last night was just investors who adjusted their portfolio just for the tax purpose, which was evident in the overall trade volume as it was very low. In addition, as I said yesterday, S&P 500 is less than 1% with respect to its all-time high value, and whereas Dow Jones is already in the all-time high region. So there was some nervousness. Hence, if we take S&P 500, it oscillated between maximum of 0.2% on the positive side and 0.2% on the negative side. But in the end, all three index ended in the positive side. Dow Jones increased by 0.3%, S&P 500 up by 0.14% and Nasdaq also had a marginal increase 0.16%. However, VIX dropped 5% and the value moved from around 13 to below 12.5. And another positive thing, 10-year bond yield dropped to 3.8%, whereas dollar index dropped to just 100.5. Sector-wise, it's similar to India, except energy, all other 11 major sectors in US also closed positive. Overall in US market, though the index percentage increase is very low, we can say the momentum is still positive. Regarding oil price, we know the recent rally in the last few days was due to the issue in the Red Sea. However, yesterday the ship movement resumed despite the attack on last Tuesday. And also shipping company Maersk said in the next upcoming week, they plan to send at least 12 ships through the Suez Canal and Red Sea, which in turn made the oil price to drop over 2%. At the time of this video, Brent crude is trading around $79.5 US per barrel and WTI crude is at $74 US per barrel. Regarding Indian ADR, in line with both Indian and US market, all of them closed positive of 0.5 to 1%. About Gift Nifty, today early morning it closed at 21,792. Today is the monthly expiry, so we can expect premium to drop to 0 by the end of the day. On that basis, it's indicating gap up opening of 120 to 140 points. Those were the things happened yesterday around the global market. Now let's look at the India specific information. First, similar to how RBI for banking, there is a government agency called IRDAI for insurance sector in India. Yesterday in the aftermarket hours, they released their respective report that how insurance in India is doing in the last September quarter. In short, private sector's life insurance premium increased by around 16%, while the public sector increased around 11%. Interestingly, in profit terms, the public sector grown 800%, whereas private sector increased only around 72%. Anyway, we can expect market to react for this report. Second, back to RBI. Yesterday, they approved the merger of IDFC and IDFC First Bank. So today, both the stock will be on focus. Third, Canara Bank board has approved to initiate the process of demerging and listing its mutual fund subsidiary as a separate IPO. Since it's demerging as a new company, so it's a value unlock, and generally we can consider this as a positive. As a summary, global momentum is still positive and it is evident in US market, Indian ADR and especially Gift Nifty as it's indicating the gap up opening of over 100 points. However, Reliance GDR closed 0.5% negative is a bit of concern. And also, as most of us know, today is monthly expiry, 2023's last expiry. So there is a high chance market will be more volatile, which we saw in the increase of yesterday VIX despite very low trade volume. So for now, it's indicating gap up of 100 points, but be cautious, anything might happen both today and tomorrow. Anyway, moving on. Yesterday, as per stock open interest, India Cements, Jubilant Footwork, SBI Card, BHEL, Adani Enterprise, PFC and Britannia got an increase in open interest along with a negative close indicates the short build-up. On the other hand, Bajaj Auto, SAIL, JK Cement, Vodafone Idea, Bank of Baroda and Ultratech Cement got an increase in open interest with a positive price close indicating the long build-up. About the things to look out. Early morning, Japanese retail sales data was released, which is good, increased 5.3% against expectation of 5%. So I expect Asian market to react positively. Let's see. After that, there is nothing I'm aware of that scheduled during our market time. However, in the night, US weekly jobless claims, home sales data and crude oil inventories are some of the items we need to keep an eye out today. Coming to technical, as we discussed, Nifty hit another all-time high value. Actually, it's 12th time in the last 18 trading sessions in December. Thus, on the daily chart, it formed a green long opening Marubozu candlestick pattern with minor upper shadow. And also, by combining the Tuesday candle together, this pattern is called rising window. Generally, a rising window appearing after the significant increase is a sign of possible uptrend continuation. In addition, RSI indicating a bullish crossover, Nifty had a breakout from the long red candle that formed on December 20th and breakout from the consolidation zone. So, everything suggesting that Nifty is poised for a further move towards the 22,000 mark with a robust support now placed at 21,475 on the downside. Just in case, Nifty might face some resistance at 21,800. Then, in case of Bank Nifty, similar to Nifty, it also saw a decisive consolidation breakout and hit a new high 48,348. Thus, on the daily chart, it also formed a long bullish candlestick pattern with better volume than the previous session. Looking forward, we can expect Bank Nifty potentially to move towards the target 48,500 to 48,800 on the upside with a support base at 48,000. Moving on, regarding monthly options front, the maximum call option open interest was at 22,000 strike, followed by 21,800 and 21,700, with new call option writing at 21,700 strike and then at 21,800. Thus, the options data indicating that 21,700 to 21,800 may be an initial resistance for Nifty, followed by psychological 22,000. Whereas on the put options front, the maximum open interest was at 21,500 strike, followed by 21,000 and then at 21,600, with new put option writing at 21,600 strike and then 21,500. Hence, the immediate support is at 21,500 mark. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.